Here's what's making news now around Indiana. Well, Fort Wayne International Airport is celebrating a milestone, the airport reaching its 10th consecutive year of passenger growth in 2019. Officials say nearly 800,000 passengers utilized the airport last year. That's an increase of about 4.5%. This year, FWA launching a major terminal expansion project that includes an additional gate, and plans call for future expansion and gate area reconfiguration. In Sullivan County, Hallador Energy says it is laying off about 90 employees at its Carlisle mine as the company temporarily idles production. Terre Haute-based Hallador says shrinking demand led to the move to shift production to a lower-cost operation in Oaktown. Hallador is also reducing its sales guidance to 7 million tons for 2020. That's down from a forecast of 8 million tons. And the Idea Center, a business incubator at the University of Notre Dame, doubled in 2019 the number of startup businesses it helped launch in the previous 2 years combined. The Idea Center says 32 young companies were put into motion, bringing the total number of startups to 64 since the center launched in 2017. Notre Dame says the startups have created 99 full-time jobs with an average salary of $72,000, and they have collectively raised $6.6 million in investment. Well, monthly real estate statistics from FC Tucker Company continue to show that 2019 showed a continued upward trend for both home sales and home prices in central Indiana. But what does 2020 hold for Indianapolis and markets statewide? For some answers, we turn to FC Tucker Company CEO Jim Litten. As always, Jim, great to have you in studio.
Thank you, Gary. It's great being here.
Okay, we want to talk about 2020, but let's look back quickly at 2019. Mm-hmm. Seemingly another strong year for real estate.
Another banner year. It was a little crazy, though. Mm-hmm. January and February of 19 were not very strong. Mm-hmm. And January and February were sort of a hangover from the fourth quarter of 18. And if you remember, in the fourth quarter of 18, interest rates started going up, and the rumors were that they were going to go up 3 or 4 times. The stock market was in disarray. So that carried over to January and February. In fact, at the end of February of 19, the market was off about 15% in units. Mm-hmm. But then it started roaring back when the spring came, and the year finished up strong. It was, if it wasn't a record year, it was very close to a record year. And it's getting very difficult to increase these numbers each year, and the reason being we just don't have the inventory.
Inventory going to be tight. Okay, 2020 presidential election year.
Yes.
What impact might that have on the market this year, depending maybe on who wins the presidential election?
Well, you know, that's a $64,000 question. Right now, the market started off strong, and I was with a group this morning, and I reported to them that it is my feeling that when we get to about late September, early October, if the last elections were any indication, they have been so contentious that it could upset the market a little bit. Historically, if the incumbent wins, it's business as usual. Mm-hmm. If another party wins, there's usually about a 2 or 3 month period of everyone saying, let's wait and see what happens.
Yeah.
But I think we're going to have a good year.
Yeah, as you look statewide, we've talked Indy here, but talk about markets around the state.
The markets around the state have been very similar to Indianapolis. They have the same challenges that we do: lack of inventory. Prices are increasing throughout the state about 5 to 6% a year, which is healthy. It's not out of control. But when you go to Evansville, and I know that you just had Mayor Weineke on, they've had so much job creation down there. Their market's very healthy. Fort Wayne has done well. Bloomington and Lafayette are doing great. We've got offices in 35 markets throughout the state, and it's been very good.
Yeah. As you look at the year ahead, everyone's obviously focused on mortgage rates. So what those might do, any projections on where rates might be headed? Well,
you know, the Federal Reserve has made a policy statement that they're going to keep rates where they are as long as inflation is under 2%. Mm-hmm. And right now it's under 2%. And so I think these rates are going to stay the same. And, you know, as you and I have talked in the past, there are 3 things that drive the real estate market. Number one, interest rates. Mm-hmm. They're in the mid-3s right now, and that's an awful good rate. The other is consumer confidence. Mm-hmm. it's at a near all-time high. And third is unemployment. It's in the threes. It's like three legs on a stool.
Yeah.
And if those three legs are standing, I mean, there's no indication of why our market shouldn't just be great.
All right, positive forecast. Jim Litten, the CEO at FC Tucker Company. Jim, as always, great perspective. Thanks for joining us.
Thanks, Gary.
All right.